Just going to take you through the USD yen trades from 2015. So starting over here in March, we see the market type is a little bit choppy, but I'm looking long, and the reason I'm looking long is one, fundamentally, there's monetary policy divergence between USD and yen, and there's also a variety of other factors why I like USD strength as well. But basically there's very strong reasons for buying USD against the yen. And if we look back in time a little bit, we can see we're in a major uptrend. So this is only part of, this is really near the end of the uptrend actually. If we look back further, we can see there's a long-term uptrend in the pair. Okay, so that's why I'm looking long. And we go back here, we see the breakout. I attempt to get long on the breakout. We have a little bit of a hammer candle, so I'm taking a little bit off just out of caution, and then we go down and we get stopped out. Now you can expect this on breakout trades. It's not always going to break out. You're going to have a breakout and you're going to have a failure, maybe 50% of the time, or even more, depending on how well you're timing your entries. So then we see the market type just settles back down into a sideways market type, and I'm looking for an entry at this point off the bottom of the range, but I don't actually get any. So just waiting, and then we see the price break out and close above the Bollinger Band. So you can see that there. Price is now closing above the Bollinger Bands. And then we get the opportunity to add as the price continues in our direction, adding a couple of times. And then at the top we have a fast market type stop. So fast market type stop is when the market is moving outside the Bollinger Bands. You can see that it's moving really fast outside the Bollinger Bands, and as soon as it starts to come back inside, particularly if it forms some sort of reversal pattern, then that gives us an indication that it might be a good time to take a bit off, because fast markets can reverse very quickly. And then we have this, not a classical double top formation, but you see you've got the reversal candle and then attempts to move higher, and we get another reversal candle. Now this is pretty significant because we had this initial breakout higher on the back of good news. I believe from memory it was very strong employment data in the US, but immediately it failed. So that gives us a sign that we might want to take a bit more profit, because if you have good news and the price doesn't move on it, or worse, it goes against you, then that's a relatively negative sign for the pair. And then following that, we had some Bank of Japan officials come in and start talking the currency down, and this is responsible for this big drop. But we still continue to hold the core of our position on our stop. You can see the price action becomes very choppy, and eventually we get stopped out here. And then we're just waiting again, waiting for a new entry signal, and we get one over here. You see the market becomes very quiet and sideways. You can tell the Bollinger Bands have become very tight, and we get the price close over the Bollinger Bands. Now immediately as it closes over, we get the reversal. So out of safety, I mean, we're not trying to always predict the market or hope it's going to go away. If the market gives us a sign that, hey, our idea is not really working, then we can just get out. So immediately after our entry, we get this very strong reversal, giving us a signal that our trade has failed. So just jump out of the market here. We actually see that led into this major sell-off. You might be saying, well, why did you have these major sell-offs when the fundamentals are so positive for buying the yen versus, selling the yen versus the USD? Well, there's a lot of factors that go into it. In this case, it was risk off. So stock market started to sell off. When stock markets sell off, funding currencies like the yen get weaker. And in this case, we saw the pair rapidly sell off, liquidity withdrawn, and we had this extreme market type. And that's also what's responsible for the drop in 2016 as well. It's a shift in fundamentals to trading on risk off moves on currency pairs. So that's not really the topic for today, but just get a bit of an insight into why currencies are not always just going to go in your direction or in a straight line, and why you need to trade what's in front of you. So anyway, at this point I'm still liking yen fundamentals. So we get this sideways quiet market type, and I'm not looking to trade it short in this case. I'm only looking to get long on the sideways quiet market type. We have the breakout, it fails and busted with this pin candle, and this is where I'm entering long. Then I add again on the breakout, and then the price moves up in our direction. We see that RSI becomes overbought, and fast market type. So we take a little bit of profit once the price closes back inside the Bollinger Bands. See this pretty clear double topping formation. Just draw a line there so you can see. Tempted to break out, bearish engulfing candle, and that's often a sign that trade is over, at least for a little while. So it can be prudent to take profits there. So took some profits here, and then finally I actually thought we might get another move higher, and I was going to add back on the breakout up, but that didn't occur, so we end up getting stopped here. And then we move into this risk off environment that I'm talking about. And perhaps what I'll do is I'll just quickly take you to the weekly chart so you can see. Just delete this information. Okay, so we had this bullish engulfing busted breakout on the weekly chart. Actually bought here my longer term system, so I'm showing you my system on daily charts. I have a system for weekly charts too. I bought here. We had some very bearish yen news from the Bank of Japan. They cut interest rates to negative, which was a surprise to the market. Actually took some profit on the way up, and then we saw this big reversal candle. And again, as I mentioned, if you see price action that's contradicting the news, it's often quite a strong sign. So this big reversal candle, our busted breakout has failed, and that's actually a short entry. So I went short once the price broke below here and continued to hold a short yen position and a short yen view, looking for a move back down to initially around 105 or so. Okay, so that's the USD yen trade examples for 2015. Again, my point here is not to show you good trades or bad trades necessarily. It's to show you how the principles of the advanced forex course help you to cut your losses short, take profit when the market makes some available, and at the same time let you leave some profits on the table or some money on the table for those big wins or trends when they go your way. Thanks again, and I'll see you in the next video.